big deal. I mean, inflation, do they tweak the language around inflation, given that their preferred measure is at the target?
I believe that's what the dollar bulls are expecting.
Yeah.
At the minimum, really, the fact that they have to recognize that inflation expectations have picked up a bit. I think that if you take a longer-term chart, however, inflation expectations, various measures at our disposal, still look historically rather low. So if they want to go ahead and just leave it at inflation expectations still looking historically low, they may as well do that. I think something that may argue in favor of as little changes as possible is the fact that we did see financial conditions in the U.S. tightening quite a bit since March, and the setup looks quite different from the March meeting itself. Treasury yields broke through the 3% level, albeit briefly, and the dollar is rallying as we speak. Stocks are not going anywhere, but on the whole, that kind of gives you tighter financial conditions. And the question is, does the Fed want to let that continue at the current pace, going to the June meeting when everyone is expecting them to hike rates? And I think my hunch is that the statement will be tweaked in a way not to really make markets really betting too aggressively on further tightening. So on the whole, on the FX side, I think the dollar bulls may be left underwhelmed, disappointed. So we may end up having some profit taking.
Has it bottomed, though? I mean, Bloomberg Dollar Spot Index, highest level since January. We've seen that rebound. What next?
Well, I mean, longer-term outlook, I still think that still relatively negative for the dollar against selected currencies. We still think that euro-dollar may break through the highs of the range, 125.50. Our own forecast for end of the year is still 126, which looked quite conservative, I have to say, only a few weeks back. But now it's reasonable, I have to say. So I do think that longer term, the old risks may indeed come to haunt the dollar yet again. We have the weakening twin deficits, we have the US protectionism, and on the whole, we have the flattening Treasury yield curve, which ultimately means that Treasuries are not as attractive as other really fixed income securities around there. So on the whole, the rebalancing story out of the dollar into euro, for example, will very much continue. But I guess for the time being, it does seem that the dollar, indeed, momentum is still very much there. So on the whole, well, we could see some profit taking in the wake of the Fed meeting. I guess investors' next really focus will be the upcoming data, payrolls, and so on. So we may have to go further from here before we reverse again.